With investing and trading, there are two real big schools of thought, and that is fundamental investing and trading, or fundamental real investing, and technical analysis. And this, of course, is all about technical analysis. But let's talk a little bit about fundamentals and how you can maybe apply some fundamental concepts of that school of thought to cryptocurrency. And I'll also actually tell you why cryptocurrency of many different types of securities out there really lends itself even better to technical analysis. So if we look at fundamental analysis, that's understanding the fundamentals of something, like understanding the underlying business model of something, like a company example, or even a coin. What is the underlying business model behind it? How does it differentiate itself? How is it different than, let's say, its competitors? And what might be the product or service it might offer? What are some of the features or benefits? Or like in a cryptocurrency coin, the project and stuff, what are some things it might offer in terms of a feature of that coin or underlying blockchain technology that might be different than other ones? And is there a first mover advantage, right? Is there some coins that got in earlier and so they have an advantage because they were just in there earlier than others? And then what are the barriers to entry from new competitors coming in or copying them and maybe outdoing them? So these are all kind of fundamental things, and certainly from things, are they in it for the long term? Are they more of a short-term ICO, initial coin offering that just doesn't work out, or it just really never takes off, or is it something that's more established that's really going to have some staying power? So you can see from fundamentals, we're not talking about charts or anything like that. We're talking about more, conceptually, what are some competitive advantages and what's conceptually going on here and how to evaluate a business or a concept. So let's apply that, let's say, to some cryptocurrency to really understand how we could maybe use, or how we could use, fundamental investing with a cryptocurrency. So for example, let's say we take Bitcoin, for example. Well, certainly in terms of a brand name, it is by far the dominant brand name in cryptocurrency. I mean, a lot of people that might say, oh, I know Ethereum, I know Ripple, I know other ones, but for the general public out there, they know Bitcoin. If they know anything about cryptocurrency, they know Bitcoin. So it's got this strong brand name, really developed from its huge first mover advantage, right? It was the creator of cryptocurrency, right? So it got in there early and had all that initial kind of growth and buzz, and maintain that going forward. It's readily available, as in it's on many different types of exchanges. You can't avoid it. It's the first thing you're going to see on your screen when they list the cryptocurrencies by trading volume or market cap or whatever it is. There's Bitcoin on the top all the time. Yeah, the future for Bitcoin looks, I would say looks very good, right? There's more and more e-commerce sites and things that are supporting it. Things like Square and PayPal are supporting it. So you're going to see this particularly with Bitcoin as that brand name. It's going to keep getting supported in ways beyond just exchanges, beyond just how we might use it for trading and making money from an investment standpoint. At some point, especially as the coin becomes less volatile up and down, if it starts to become more stabilized, you'll start seeing more retailers using it too, whether it's e-commerce or particularly even like online, or well, that'd be e-commerce, but like brick and mortar type retailers will support as well too. So just like you could pay with a credit card, or you could pay in a fiat currency, you could pay in like Bitcoin. Much more likely to happen with that big first mover, that big brand name Bitcoin, than let's say other coins. And also some more government support around it again too. Established brand name. If they're going to really start approving coins from a government regulatory standpoint in a greater degree, they might approve things and do regulation around the whole universe of cryptocurrency, or they might start segmenting out something, say, we're not going to do anything with the rest of it, but we're going to focus on a couple. If they're only going to focus on a couple and really start getting approvals around that, Bitcoin will be in the mix for that because of that fundamental aspect of that brand name and its huge first mover advantage. If we compare that to the number two right now, which is Ethereum, that's a developing brand name from a fundamental standpoint. We're thinking about this fundamentally, a developing brand name, readily available on all these exchanges as well. It's really on a roll. It's on the sustained rise, and it's different from Bitcoin, right? It differentiates itself with like the smart contracts and things. So you could say like, oh, Bitcoin's great for this, or it's got this great brand name, but I know Ethereum does that, trading, for example, and as a medium of exchange, but also does so much more with smart contracts and people building on the Ethereum network. Again, adding more value to Ether, the coin underneath Ethereum. So if we think about fundamentals, the thing is with cryptocurrency, it doesn't have fundamental investing ratios like, let's say, the stock market does that aids in evaluation. So if you're in a stock market, you're evaluating companies around all these things we talked about from a fundamental standpoint: brand name, first mover advantage, competitive advantage. But then you're also going to look at valuation and things, these ratios. You've probably heard of some like price to earnings ratio, or return on equity, or debt ratio, or dividend ratios, all this different type of ratio stuff that's out there. And cryptocurrency doesn't have that, right? They don't have earnings. It's a coin you trade, right? So fundamentally, you can think of currency as a business from some of these projects, underlying themes, but they don't really act that way fundamentally in terms of serving customers. They just kind of, in some ways they are. You could argue certainly with like smart contracts and stuff, in some ways not. But really where cryptocurrency lends itself very, very well to, as the stock market does as well, is technical analysis or charting, where you're looking at supply and demand and establishing value and using all these indicators we're going to learn in the course that are going to really help you as far as understanding when to buy and when to sell in terms of the technical part of cryptocurrency, because it's much more heavily laden around trading action and supply and demand versus more of, let's say, marketing of a business or a business plan of that nature. In fact, another good way to think about comparing fundamentals and technical, no matter what the security you're looking at, is fundamentals can give you an idea of what to buy. Bitcoin, Ethereum, because the big guys, newer ICOs, those some things you might be looking at in terms of what to buy. And technical analysis can help you on when to do that, when to buy and when to sell. So fundamentals is more about evaluating and buying, maybe a little bit about selling later, but technical analysis is all about being very targeted in your purchases and your selling. So you might say, well, I really want to trade Bitcoin because it's readily available, maybe some Ether too, and I just want to concentrate on those two. Now I want to know, when do I buy them and when do I sell them, and how do I get in and out and become profitable? And that's where technical analysis will help you. Versus you could buy stuff, certainly for the long term and hold things for a long term. You could buy Bitcoin and hold it forever. That's perfectly a fine strategy as well too. In the cryptocurrency world, by the way, that's called HODL, HODL, stands for hold on for dear life, because we know cryptocurrency world has a lot more ups and downs in terms of prices. Another reason why it lends itself well to technical analysis, because they have these wide price ranges up and down. You have more opportunities for trading and buying, low and selling high, which is always the name of the game in any security that you're trading.